Hello, and welcome to Pro Trader Strategies Market Commentary for Friday, June the 3rd. Unenjoyment Friday, as we used to say on the floor, because of unemployment usually brought a little bit of unenjoyment in that as crazy as it would get. But anyway, my name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement in your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Quite a bit of economic data today in the form of services PMI across the pond and here in the States. And we also had our unemployment numbers. So for the most part, Spanish, French, German, and came in line with expectations on their services PMI numbers. Italian services PMI number came in below 50 at 49.8, was expected 52.3, and the rest of those that I talked about came in above 50 and right in line with what was expected. Great Britain's services PMI came in at 53.5, so slightly above what they were expecting, 52.5. And then European retail sales came in at flat 0% increase or decrease, but that was well below what was expected there. Then we had here in the United States, hourly average earnings came in at 0.2%, was expected 0.2%. And then the non-farm payrolls number came in at 38,000 jobs created. That was pretty bad. It was expected 157 or 159,000 jobs created, but they're saying that some strikes and things of that nature may have caused that to downtick, but that would be 120,000 jobs, which I don't think that that's the case necessarily. Some people trying to find some silver lining in that number, it looks like. But the unemployment number, the headline number, downticked to 4.7. So don't expect any politicians to really talk about the hiring side or the jobs created. They'll be talking about the unemployment number downticking, which is bizarre nonetheless. And our services PMI came in right in line with expectations at 51.3, was expected 51.2, and factory orders came in flatline. We should be starting to hear some things coming out about Fed member Bernard is the one that is speaking now, not Ballard, but Bernard. So that could be a little bit of a market mover. I would have to say that with the unemployment number that we saw and some of these other data points, that the Fed may not raise rates at the meeting coming up here pretty shortly in the next few weeks. So moving on to the overall markets, this is a bit strange to me. The dollar really got crushed on that on the unemployment numbers, and you would think that that would have given lift to the oil as the dollar goes down. Since it's a dollar denominated product, you would think that it would drive oil higher, but it has shown some weakness in the face of that, which is really making me a little bit more confident with my shorts. So we're actually going to be building a product around an oil-related product in the webinar. So you can go to protraderstrategies.com and sign up for that, because we're going to be talking about how we can play this to the downside on that, and then have our limited risk to the upside if something unforeseen happens and we rally above this 50 here, which is the key support resistance area that I've been talking so much about. If it settles above 50, it's going to want to break loose to the upside. But I just see all the oil pressures being to the downside. Anyway, on to the NASDAQ. As you can see, NASDAQ down pretty big today, down 31 points. Basically, on that economic data, the market was trying to push higher, but as soon as that unemployment non-farm payroll number came out, the markets just really came off, which is a little bit bizarre to me in that I would think that, we have been seeing bad economic data and the market rallies based on the fact that the Fed isn't going to raise rates. So I don't know if it's starting to really sink in that the economics of scale are not really that robust, and the overall markets are reacting to it despite the fact that even if the Fed does not raise rates. As you can see here, the E-mini S&P is just right there at the value area, or the point of control, I should say. And the market traded through it, but then the bulls or the shorts came out and started defending it. So they've basically taken back half the losses seen on this economic release. And this was the non-farm payroll release. And as you can see, we just completely imploded by about 20 some odd points right off the bat in a matter of an hour or so, and have since rebounded off of those. But we did print a new high right before the data point, but then once that point came out, it was before the equities were actually open in New York. So that, this was the futures trading there. So the only thing that I've really done, and getting the market direction correct with Gap, a couple of days ago, I went in there and sold the July 16 puts. I sold them originally for 30 cents just a couple of days ago, and with this Gap, no pun intended, GPS is the ticker symbol, higher, that has allowed me to cover this rather quickly, and I bought it back this morning for 15 cents on that little pop we saw. So taking 50% of my max profit on that. Got a couple of other trades still working, but nothing's come to fruition. Like I mentioned earlier today, we're going to be doing the webinar today on put diagonals. Now, if you watched last week's webinar on the call diagonals, you could see that there was a lot of frustration trying to build that strategy around the call side. It's a little bit easier with the puts because the puts have a little bit more inflated volatility in them, and that allows us to create this strategy a little bit easier without so much difficulty, I guess, because the calls are usually sold against position, which brings down the premiums, and puts are usually bought to protect positions. So you can find a lot better setups on the put side, so it should be a little bit easier for us today, and hopefully a little less confusing. On last Friday, it was a lot of trial and error, but this week it's setting up to be a pretty easy pickings for this strategy, especially with the low implied volatility that we've been seeing. So go to puttraderstrategies.com and sign up for that. That's all I got for you guys today. If you can't take that, take it easy.